Well, to bring all of these into perspective, I have with me in the studio senior gentlemen. Starting from my far left there, I have Mr. Muda Yusuf, the Director General, Lagos Chamber of Commerce and Industry. Thank you very much for joining us on the show. And just sitting close to him is an economist and partner, B. Adedipe and Associates, Dr. Biodu Adedipe. And sitting quite close to me here is the GMD of Invs West Africa, Ike Chuki. Thank you very much, gentlemen, for joining us.
Thank you, Chairman.
Well, I guess I have to start with Dr. Adedipe. It's the last MPC for the year. How would you assess policy making in the last 11 months vis-a-vis the global economy?
Well, thank you very much for that. Now, I situate that in context of what happened globally and then the decisions we made also here in Nigeria and what has happened thus far. So in which case, we can simply say that what happened globally influenced to some extent the decisions we made here. But again, we had problems peculiar to us in Nigeria, like we have very high unemployment rate, inflation rates had been double digits and very sluggish in coming down. And then we just came out of recession, let me say confirmed out of recession. Now that we have 2 consecutive positive growth rates of the gross domestic product. And then again, you look at other macroeconomic indices. So one can say that the unorthodox response to the state of the economy and what was happening globally has paid off for Nigeria thus far. So it also indicates that the policy direction seems to be the right one, which says the train is moving in the right direction. One important thing there is to gain speed and then maintain consistency. All right.
Mr. Chuki,
yes.
Would you say monetary policy decisions have actually achieved desired results in 2017 in terms of investment inflows and various asset classes?
Yes, I will agree with him. I think the fact that you see the stability in the FX environment since the introduction of the investors and exporters window that has led to a compression of the big band. At the point we had 521 naira to the dollar in the parallel market. And now you can see that there's far more transparency and it's all come down to about 360. That has helped. We just talked about the growth. Q2 was, rebased at 0.7%. And we're looking now at 1.4% the last quarter. So that's, again, positive momentum. We're out of recession. And inflation, although it has been sticky, it has actually come down at 15.9%. That's almost 280 basis points drop. So that tells you that some of the macroeconomic policies, the monetary policies they've been putting in are working. It's just that it needs now more time for it to kind of permeate into the system. We still believe that food inflation is quite high. If we strip it out from the headline inflation is at 20%, and that's something that we need to combat in the near term. And then we then see how that kind of rolls on into the budget. In terms of how this all ties into 2018, I think that our view as a house is that there's been greater collaboration between the fiscal authorities and the monetary authorities. Indeed, with the yesterday's issue of $3 billion in the Eurobond market, there's capacity and opportunity now for the central bank to do something more interesting, without tampering with rates, but do things that can ease the environment and allow more credit to flow to the private sector in order to spur that growth that we're looking at. You've achieved stability, but as you saw from the results from the Statistics Bureau, the growth was driven only by the oil sector, which was up about 25%, but the non-oil sector contracted. And if you're looking at the budget in 2018, where you're really focusing on getting non-oil revenue, you can't get those revenue without growth, and we need to find growth back again.
Right. Now, Mr. Yusuf, the entire real sector and, of course, manufacturers and all that have actually complained about high interest rate. Now, looking at what the central bank has done over the years, would you rather say that the Monetary Policy Authority has not been sympathetic to their cause?
Well, I believe that the CBN has demonstrated some concern over the worries about those who operate in the real economy, about the cost of fund. But this has not actually manifested in actual policy steps to deal with the issue of stimulating investment. Because, well, two major components. In the area of FX, we have seen some significant relief as a result, largely of some external factors, and to some extent, internal factors. That has brought some relief, a great relief to quite a number of operators. But in the area of the cost of fund, it's still an issue. Because when we talk about credit in this economy, first of all, we are dealing with an economy that needs to recover. We are dealing with an economy that needs to be stimulated investment-wise, both from the foreign investment perspective and from the domestic investment perspective. And if the fiscal authorities are taking steps to see how they can reflate the economy, borrowing money domestically, externally to bring the economy back on track. And what we see on the monetary front is more of contractionary monetary policy. Of course, there are arguments on both sides, whether there's risk to inflation, the risk to forex. But I believe that if you are talking about stimulating investment, one of the critical ways to drive domestic investment is to make funds available. Now, look at the scenario. First, there is the issue of the cost of fund. Second, there is the issue of access to credit, which is a major problem for many small businesses. In fact, from the statistics we have, I mean, if the SMEs contribute about 50% to GDP, and they have access or account for just about 1% of the credit in the economy. I mean, that shows that we have a big issue, you know, mobilizing or supporting the small businesses. Then we have the issue of the tenor of funds. The bulk of the funds we have in this economy are short-term funds. How do you do real investment, I mean real sector investment? How do you invest in infrastructure? How do you deal with all these major fundamental issues in the real sector with such tenor of funds? So these are the critical areas of monetary policy which I think we need to further address in order to mobilize domestic investment in this economy.
All right, we're going to deal with that, talk further on that when we come back after this timeout, because a lot of people have said that the primary role of the central bank is basically to curb inflation. So we'll talk more about that when we come back after the break. So we'll take a quick break. When we come back, we'll continue with the conversation. Just stay with us.